Hey there, folks. Greg Shepard here, S&A Financial Services. I specialize in helping folks like yourself, those in higher education, get the most out of that oftentimes confusing higher ed retirement plan. Okay, today's topic is TIAA. I just thought of this. This kind of piggybacks off the last video I did. I think the title was something about retirement income. Is it really that hard? Something like that. And I dive into the simplicity that it should be when it comes to retirement income. So this is kind of a piggyback, kind of related but not on purpose to the last video I did. So just had a client on board this morning, did a Zoom call, second Zoom call I think we had. That's how long it took for us to simplify a game plan that made sense to him, he and his wife. And he had called TIAA, got a little confused on the game plan they were trying to implement. It was fine, it was an advantageous, I'm sure, game plan, but again, he didn't feel comfortable with that. Tried to go on the website, Retirement Income Illustrator, and try to quarterback this himself. That didn't go very well. And here we are. Okay, so let me give you a background on this situation because I know a lot of you out there, he just retired less than a month ago. A lot of you are in the same camp. Okay, so you can benefit from what I'm about to tell you, okay, in various forms. None of this is investment advice. I implore you, contact TIAA. They're great on the phone. They'll help you out. Try to do it yourself. Maybe you can easily get tripped up trying to do this yourself, or contact someone, and not necessarily me, but you can feel free to contact me, but someone in my space that deals with these higher ed retirement plans. Okay, so with that being said, I have found over the number of years, 20 plus years, been dealing with higher education, that the most optimal, efficient game plan from a macro perspective is typically a combo of two vendors in our case. Now, I'll piggyback off that here in just a second. We custody our assets over at Charles Schwab. Okay, keep that in mind. We did a rollover IRA, and I'll tell you the nuts and bolts here in just a second. But the end picture was a rollover IRA over at Charles Schwab with some lifetime income annuity option over at TIAA. So we comboed two vendors for the very purpose of extracting income from these two accounts for his life. Okay, so I have found that to be the most efficient way to do it. Now, keep in mind, TIAA does have a rollover IRA option. I'm just comfortable using Schwab. I've been doing it for over 20 years over there. Nothing wrong with TIAA's rollover IRA. Of course, you can implement this game plan with TIAA kind of all in-house as well. So with that being said, this individual retired, like I said, less than a month ago, had 6 different contracts, 6, okay? It got pretty confusing because I kind of paused everything, okay? And I said, hey, let's take a step back. What dollar amount are you comfortable with? Do you want in the form of guaranteed income? There's not a right or wrong answer. Let's just start there. Okay, he gave me that number after we kind of bounced some ideas off one another, and there were reasons as to why he gave me this number, but I don't have time to get into it. So he told me X, okay, X dollars. Well, that's great. We can accomplish that right there by turning on that spigot for the lifetime income annuity option for that contract right there. Okay, and I think it was around $250,000 in that contract. Okay, so we're done with that, right? And we did, by the way, we did 50% to spouse, 0 guaranteed period. Paid out 7 point something percent. So that was fantastic. By the way, that was a lot different than what he thought it was on his own when he went into trying to finagle that website. So keep that in mind. Okay, it may not be as it seems if you try to do it on your own. Okay, so we got that sleeve. Everything else, we did implement a 2.5% penalties within 120 days of separation of service. So we implemented that penalty, that strategy on one contract. I don't advocate that. That was good for this person for various reasons, but that is a strategy that one of your contracts, some of your contracts may have. But again, you need to do your own due diligence to see if that applies to you. So 2.5% penalty on one traditional in a non-liquid account, and that instantly turned it liquid, rollover IRA. The other accounts were liquid, so again, transferred those to a rollover IRA. So in theory, what happened when we will be done, again, I haven't even sent him the paperwork yet. We're gonna have one rollover IRA, in our case it's Schwab, and the TIAA traditional, we'll call it an account, okay? That's gonna pay that lifetime income annuity option, that account over at TIAA. So we basically have 2 accounts, okay, to efficiently, effectively get him that dollar amount he's looking for. So he's going to get X from that lifetime income annuity option and Y from that rollover IRA paid to his bank on a monthly basis from that rollover IRA. Again, you can do this in-house at TIAA. I've just done it for 20 plus years over at Schwab. Now, it got a little confusing. This is going to apply to a lot of you out there. Not everybody, but a lot. So some of these RC and RCP contracts, okay, they did away with annuity products. They're only mutual fund products. They don't have TIAA traditional. So he had money market in those accounts. He was very conservative, is a very conservative investor. In order for us, if we wanted to initiate more lifetime income annuity options, which we were looking into, we had a few different options, but we could direct those accounts down to a SEP. He had an IRA we could get into, or basically create new accounts to access TIAA traditional because it wasn't afforded to him in those contracts. Okay, some of you may run into this. Okay, these RC and RCP contracts, not everybody. Okay, but again, it gets confusing. It got confusing with me talking to the great people over at TIAA, trying to kind of build this game plan, a scenario, if you will. But this is why it's important to have someone in your corner, okay, whether it be a TIAA rep or someone like myself, to really quarterback this situation. Folks, you only go through retirement, for the most part, once. And a lot of these decisions are irrevocable. So we accomplished exactly what he was looking for in a way he had no idea that we could accomplish it that way. Okay. Again, simplified that game plan. He's got essentially 2 different accounts he's extracting money from. And it's really as simple of a game plan than he's ever looked at prior. Okay. So I'm kind of long-winded here, but nonetheless, this will apply to a lot of you out there. You just got to know, you got to do your due diligence, do some research as to what strategy fits your situation. Okay. Again, I'm going to harp on this. We started, if you're in this camp, with the amount of money he wanted guaranteed. Then you kind of reverse engineer from there. Okay. Feel free to reach out to me. I'd love to, put my 2 cents, give you my 2 cents on your situation. You don't necessarily need to become a client. Educational purposes. All right, folks. I'm here to help you all out. All right. Greg Shepard here, S&A Financial Services. Like always, go out and have a good one. Take care. Bye-bye.